It's obviously that artificial intelligence has taken over the market so far in 2024 and really for most of 2023 as well. But one of the areas where there's an opportunity if artificial intelligence does grow and has downside protection if it doesn't is in energy. AI chips need a ton of energy and they're using most of that energy in data centers. If they're not using it in data centers and we move to things like inference on device, which appears to be the direction that at least some of these artificial intelligence tools are moving. Now that demand, that electricity demand, moves from data centers to your wall. The smartphone that you're using or the computer that you're using is just simply going to use more power for doing these artificial intelligence inferences. That's the cost of doing AI, is really energy costs. And so there are some companies that are going to benefit from this broad trend of using more and more energy for artificial intelligence. I want to highlight 3 of those today. They come with really nice dividends, good value for investors, and they're going to benefit from growing energy usage from electric vehicles, from AI, from basically everything that we're doing in the modern world. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. The first company I want to highlight is AEP. I'm going to start with this high-level look at AEP's revenue, net income, or earning from continuing operations in this case, and dividends paid, dividends per share, DPS, which you can see there on this chart. And I'm going to show this information for each one of these stocks so that you've got kind of a consistent baseline. Right now, shares are trading for $87.82. You can see that that gives the stock a PE ratio of 16.4 and a dividend yield of 4%. But the trends for American Electric Power AEP are pretty solid. Management says that the long-term growth rate that they're expecting for earnings 6 to 7%, and a funds from operation to debt target of 14 to 15%. The company is seeing significant growth. If you look down here at operating earnings on a non-GAAP basis, you can see significant growth from their vertically integrated utilities. This is going to be the more regulated utilities, primarily on the East Coast. They have solid growth in transmission and distribution, holdco, and then generation and marketing as well is growing its earnings. And like a lot of utilities, this is going to be just tailwinds behind the industry, behind the growing usage of power, not only for residential uses, but for commercial and industrial use cases like data centers as well. The other company living in kind of similar territory to AEP is Dominion Energy. And again, Dominion has the broad tailwinds behind it that AEP does, that the entire industry does. Not a ton of revenue growth, but solid earnings and a great dividend yield of 5.4%, which you can see right here. PE ratio 26 on a trailing basis. And one of the things I like here is the trends for where data centers are being located. This is from a recent presentation that Dominion Energy gave to investors, and it said that Northern Virginia leads the world in data centers. 94 data centers with 4 gigawatts of capacity built since 2019, and another 15 data centers expected in 2024. Why is that? The land is relatively cheap. There are population hubs right there, and things like data centers tend to congregate near each other. So you have access to an abundance of power from companies like Dominion Energy. You have the expertise to build and run these. You have the fiber available to connect all of them together. When the infrastructure starts building, you tend to have pieces of technology and assets like this congregate in a similar location. So that's exactly what we're seeing for Dominion Energy, seeing significant demand in data centers and what they call larger campuses. The company is also investing heavily in regulated offshore wind. So this is going to be another area of consistent growth, regulated returns, which you like to see as an energy investor. That means that if there's growing demand, you're going to have an opportunity to generate more returns because there's simply more assets in the ground to grow those earnings. So growing assets, growing demand is going to be good for a regulated utility. This is now just getting started. We got a long runway of potential growth for offshore wind power. So solar, wind, data centers, all going to be tailwinds behind Dominion Energy. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. The final one on this list is Xcel Energy. This just happens to be my home utility, but I think the Midwest is going to be one of these areas where there's just not a lot of competition. You have a more regulated environment than you do in certain other parts of the country. So these numbers are just going to continue to steadily grow over time. You can see from this chart, you have a steady energy, you have a steady revenue growth rate of about 2%, and earnings from continuing operations growing a little bit faster at 6.6%. That dividend per share continues to march steadily higher. That's exactly what you want to see from a utility stock. And I don't see this changing anytime soon. Areas like Minnesota, Wisconsin, Colorado, where Xcel is operating, doesn't get a lot of attention from the media, but these are areas where there continues to be steady growth in electricity demand. You have the same data centers. You have an abundance of power in places like Iowa and western Minnesota. And so this is going to be another company that can continue to grow. You can see that we have a price to earnings ratio of just over 16 and a dividend yield of 4.1% for Xcel Energy. The wonderful thing about investing in energy stocks and utility stocks to get exposure to artificial intelligence is you don't really have to overthink it. You don't have to pick the winners. You don't have to pick which chip is going to be best, which region is going to adopt products the most quickly, whether we're going to be doing AI on device or in the cloud. All of it is going to be a tailwind for energy usage. And this is really the commonality with everything artificial intelligence related. Is the GPUs, particularly that NVIDIA are making, are using a ton of energy. And that energy is typically going to come from the local utilities. They're going to work with these data centers to bring in transmission and distribution, build the infrastructure. A lot of that infrastructure is regulated. Where it's not regulated, it's going to be built by independent power producers, which each of these companies has their own independent power producer arm. So all of this is just a tailwind behind each one of these companies. And I think for investors who are looking to get exposure to artificial intelligence, where valuations are extremely high right now, anything AI related is extremely valuable, very high price to earnings multiple, very high margin expectations. And we don't know exactly how that's going to play out. But if there is tailwinds, the energy space is going to be a place that you can get exposure to this, collect a nice dividend along the way. Each one of these three stocks is trading for a relatively attractive price to earnings multiple and has a dividend yield over 4%. Those dividends are also going to grow. So the payout is going to, over time, be even higher than low risk investments like treasuries, like a high yield savings account that might be yielding over 5%. So I think this is a great way to get exposure to the growing energy needs in artificial intelligence. There are also component plays that I will highlight later on this channel. But overall, this is the kind of thing where a rising tide lifts all boats in energy, and you get that advantage without having to pick the specific AI winner. So I think where prices are right now, very attractive way to get exposure to AI. But what do you think about energy? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.